to Mayuresh Joshi as well, joins in on the show right now. Mayuresh, hi, afternoon. TCS has pretty much set the trend. We're expecting weaker performance from Infosys, and clearly the disappointment from TCS is rubbing off on what the IT stocks are doing. Wanted to understand from you, where within the Q4 earnings season are you expecting outliers from? Where is it that you're expecting a positive surprise by way of earnings performance?
So afternoon, Aisha. No, absolutely, I think. And the large consensus is built on expectations that revenue growth is going to get muted. With the fresh banking crisis which has emerged in the US and the commentary which has come so far from TCS, it seems that BFSI will be a weak link for most stocks within the IT space. Therefore, I think large expectations in terms of an outperformance as far as an earnings outbeat is concerned seem very muted at this point of time. Margins should be relatively better for most of these companies because attrition issues are largely behind them. What you're probably also seeing in terms of more consolidation happening when it comes to either outsourcing or otherwise, it should also prop up margins to a large extent. Having said that, the kind of price damage that has probably happened for most IT stocks, large caps, mid caps, a few outliers, Aisha, if you ask me, within the mid-cap space have been stocks like KPIT or Sonata. But the story there has been unique in terms of revenue growth far higher than its peers, more order wins coming their way, which gives even more revenue visibility going forward. And as things start cooling off, EBIT margins should remain extremely stable for these companies as well. Therefore, I think large cap IT companies or the sector as a whole would probably get into a time-wise correction. A large part of the price damage is already done. The mid-cap universe, probably if they disappoint in terms of earnings expectations, might correct more because the valuations in comparison with large caps are still relatively higher. So overall, for the pack as a whole, I think the valuations have come on. But whether it's the right time to probably get in the stocks at this point of time, our take is that time correction might take a quarter or two, which means better entry points in a few weeks or months.
Mayuresh, IDBI Bank today is, the stock is on a roll. A news agency has reported that there are 3 bidders who are interested in acquiring government stake in IDBI Bank. The government has already cleared the decks. There is a lot of changes which have happened both at the regulatory front and even at the government front. Do you think decks are now cleared for IDBI Bank, and this really could be a classic news-driven stock for rest of the year?
I think as far as the news is concerned, probably it will move as the news comes through. But as far as the asset quality portion is concerned, it is going to take time. I think who's going to take over what part of debt, how much of that is already provisioned onto its books, and how much further provisioning is required for the rest of the assets that remain on its balance sheet. I think they still remain big question marks because asset quality pressures have continued for the bank over the periodicity of time when other banks have reported a better set of numbers on these key parameters. So I think sentimental moves absolutely possible. But a couple of banks that we would like to keep on our focus on the O'Neill lens. On the private side, Federal Bank, good update given as far as Q4 is concerned. Expectation in terms of reasonable advances growth expected to continue for the better part of this financial year. Deposit mobilization has been reasonably good as well. And therefore, the NIMs, even if they stabilize around current levels, with a good portion of their advances growth also coming in from gold loans, where the margins are relatively higher and asset quality pressures coming off, is one bank to keep on your radar. The other mid-cap bank from the PSU space would be Canara Bank. They had a huge deposit mobilization in the past few months. How they are going to manage the credit deposit ratio, which they will over the next few quarters, manage their NIMs as well, is going to be critical. But going by management commentary as they delivered in Q3, they're able to do that in Q4 and continue the same performance. I think Canara Bank can be one dark horse for the mid-cap PSU space.
Mayuresh, your take for the FMCG pack, do you think earnings can surprise positively, or there is a bit of negative surprise which is possible as well, especially because Street is banking a lot on inflation being over and commodity pressure being over?
Sure. Afternoon, Anisha. I think 2 things happening here. One, I think in terms of volume expectations, the volume push through will be very, very evident this quarter around. A lot of FMCG companies apparently struggled in Q3 as far as volumes are concerned. And therefore, I think how the volume growth plays out and pans out in Q4 is going to be extremely critical. You're absolutely right. In terms of input costs, the deflationary aspect has started playing through. A lot of inventory, the high cost inventory that they probably had on their books has largely got consumed in Q3, partially in Q4 as well. Therefore, the entire premise in terms of input cost actually acting as tailwinds rather than headwinds Q1 onwards should play positively as far as the margins are concerned. The next trigger point for these stocks Q1 onwards is obviously going to be how the El Nino effect plays out. If the IMD forecast is to be believed, and if monsoons are normal, rural consumption will come roaring back, and that probably aids volume-led price growth for a lot of these FMCG companies, giving them the impetus in terms of the operating leverage that is much needed. So yes, I think few of these leadership stocks like HUL should probably be kept.
Mayuresh, what explains this comeback in autos suddenly?
So two things. One, I think the expectations in terms of the worst factors related to semiconductors, the input cost inflation largely behind them. Second, in terms of the rush that we probably saw, at least in the December quarter, in terms of bookings, as far as CVs and SUVs and PVs are concerned within that space itself. CVs have been surprisingly very, very strong, have held out in terms of volume growth for these companies as well. Last but not the least, again, coming back to the IMD forecast and El Nino, if it turns out to be a normal year, what we probably expected to see in terms of the volume push through because of government incentives, whether it's MSPs or otherwise, related to a bumper harvest, should probably lead to better realizations and improvement in terms of the two-wheeler sales as well. Emission norms also help to a large extent for the CV players in general because of the push through that happened in the previous quarter. And therefore, all these factors combined together are probably giving that positive impetus for the sector as well.